Hey, it's Michael Saul, but everybody calls me Tiny, and this video is the bounce over already. This is stock market analysis for the week of November 5th, 2018. If you would like to receive intra-week updates, go to www.attackthemarkets.com, put in your first name, your best email address, follow the directions, and you will be on the distribution list. Facebook group, facebook.com/groups/attackthemarkets. And if you never want to miss a video, hit subscribe and smash that bell so you'll always be notified when I upload a new video. And if you would be so kind, give me a thumbs up and leave a comment so I move up the ranks in YouTube. Okay, let's take a look at what happened last week. So, last week I was saying that I did not feel we were ready for a rally. However, I did say that if we were to go a bit lower, that we would be set up for a possible bounce, and that is what happened. We went lower early. We hit the measured move that I outlined a few weeks ago. We pierced the 78.6% retracement, but then what happened? We came back above it, paused on Tuesday, and what had an update Tuesday, and then Wednesday, Thursday, also up days, and then Friday we gapped up, ran into the 20, and turned, came back down. So, is the bounce already over? Well, there's a good chance that it is. However, I don't know if we're ready to just continue to move sharply to the downside from here. All right, we did have the coil. We did come up, and we went back to basically to the breakdown point, right where it broke down, and we turned tail. If we get followed through to the downside, I am looking for at least these lows to be tested, and then I want to look at some momentum indicators, stochastics, RSI, MACD, whatever your particular preferred flavor of indicator is, and look for a divergence. I think that on the ultra short term, we are actually overbought here, and I know people may be saying, what does that mean? How can we be overbought? We just had this complete collapse, but you know better because you watch these videos. I'm talking about the ultra short term, okay? Just this little bounce right here. We are overbought on that basis. All right, now again, I don't think we go into a new bear market here. I don't think we, like I said, continue down and get a new leg, but if we take out last week's lows, we could very well go back to the lows on the year back in February. So if it sounds like I'm hedging myself and I'm not exactly sure, yeah, you got it. I'm not. Okay? What I am confident in is that we will try to test back down. That's where it ends. I don't know if we're going to make it all the way down. I don't know if once we make it back down to the lows, if we diverge and then we get a better bounce here. All right? I don't, that's one step at a time here. We are in what is usually the best time of year for the bulls and the best time of a midterm election year as well. So you have seasonality at your back, but that's nowhere near enough. You can't just trade on seasonality. You also need the technical setups. And if we were to go back down and get a nice momentum divergence, in my opinion, that would be that technical setup that we were looking for. All right, so there's the SPY, the S&P 500. Here's the Dow, similar, acting a little bit better. Here's the Russell. The Russell came up. The Russell closed multiple days below 78.6. That's telling me that on the next move down, it should get at least the 100% retracement. Mid-caps already had the 100% retracement, and they're on the bounce. But if they go back down, I want to see what they do down at those lows. And then here's the NASDAQ. Again, acting slightly stronger, but notice how it got jammed right at where the 20 and the 200 are connecting here. So also turn, let's see if it comes back down and to either test the lows, or I think goes a little bit lower and gets to that 70.6% retracement. Okay, so let's look at some of the sectors. Here's the semiconductors. Okay, so they broke down out of what I believe is a bigger picture topping pattern, but they came right back up into the range. So they have to leave that again in order for it to confirm that break. How about the banks? Yeah, banks on the bounce as well. They came out of the coil to the upside. Also, a little non-decision candle on Friday as well. Here's the broker-dealer. Watch the 50-day moving average. Let's look at biotechs. Yeah, so biotechs, they had a nice bounce. They had a pretty good relative strength bounce here, and you can see the spinning top right at the 200-day moving average. Bonds continuing to move lower. Rates are continuing to go higher, and in my opinion, that's going to continue to lay pressure on the equity markets. Now, let's look at this right here, because we do have the new lows. Let's see if we have a divergence here. And again, a divergence in and of itself is not enough, right? You need confirmation and everything else. But let's take a look. We got stochastics. All right, we're going to make a little adjustment here. I'm going to make it a 14.6, and then we're going to do 14. Whoops, sorry. We're going to do 14.63. Okay. A lot of people ask me, what are your settings? Look, the settings are whatever you want to stay consistent with. Okay. So I don't know if these are the magic settings or anything like that. I find that all humorous, actually. I don't believe there are any magic settings, okay? They're just used as reference points. Remember, indicators lag. Price is what you're looking for. All right, so here is, you have at least 8 candles in between. So, the more the merrier. There's more than that, right? Here's this low, and here's this low, and there's 1, 2, 3, 4, 5, 6, 7, 8 is right here. 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Okay, so you got more than enough. And you do have a divergence here. So bonds may want to look to go on the bounce here. I want to see that. But remember, as bonds were rolling over last week, the market was actually on the bounce. So there's not a definite inverse correlation. I just believe that higher interest rates will correlate with pressure on the stock market, right? But anyway, so there is a divergence here. So we want to watch. You'll also have to wait for confirmation on that, but that's another story for another time. Don't have time to go through that. Here's gold. So gold is consolidating here as well. Again, I didn't see a bottom here. I'm still not confident this is a bottom, but so far it's proven me wrong because it has not been trading back lower. And here's oil. So oil, which popped up, hit a new high in October, now back below the 50-day moving average. I'm sorry, below the 200-day moving average. Got distracted by looking at my stochastics there. So let's see what it does if it gets down to this 13 handle, which is the relative lows over the summer. All right? So for this week, I want to see, do we get confirmation that we are moving back down? Do we take out Friday's lows? Do we head back down to the October lows? And if we do we get a divergence down there? Will that set up a buy signal? All right. Now, what if I'm wrong? And what if we decide we're just going to go crazy here and go higher? Well, then it has to take out Friday's high, and specifically on the S&P 500, it has to take out the 200-day moving average. So watch this. Let me know what you think by sending me a question to tiny@attackthemarkets.com. Don't forget to join the list so you get intra-week updates. And that's it. I will talk to you in the intra-week updates or in next week's video.